The name of our company is 71 Visuals because we started in 1971. My father formed the company and always had a 2 to 3 person team.
The original company my father started was my summer camp. So went to work with him every day and in the summer and started at the bottom and worked our way up. So the transition from taking a business from what my father started to what we're doing today, my brother and I had a different vision for where this business should go. That was the change.
Once Brian and I were working together, we decided that it was a good idea for us to really expand the company and see where we could take it. So one of the things my father taught us growing up was how to work hard and put in the time and the effort, which Brian and I did feverishly. We would work 24 hours. It was all about the business all the time. So the problem with that is you don't really have time to work on the business because you're so busy doing the work, and you can't project, you can't see down the future, you can't look down the road.
So my brother and I were talking about working with a consulting company. We did some internet searching and my brother actually found Strategy Leaders.
So initially I reached out to Andy, I called her, and we had our first one-on-one phone conversation for about an hour, and I thought she was crazy. It's true. I think I thought she was crazy because she had put thoughts into my head that I couldn't even understand. So Andy painted this picture of layers of management and a huge team behind me and the ability to do anything, which I felt was not possible, or not even on my mindset. But through her help and mapping out a plan and biting things off in small pieces over time, it didn't happen overnight, but it was a process that we worked on together.
So having initial conversations with Andy and deciding that we needed management when we didn't have any was the decision. Affording those key people, what type of people do we need? Who is the type of person that has management skills to be able to command a crew? Those are all the things that Andy helped us decide. Early on in the Strategy Leaders class, Andy had identified one of our issues as being sales. Sales is a big part of our business, and we needed a rock star. Jen Milan, my partner today, was brought in to fill that seat.
Knowing that Craig and Brian valued that and had engaged Andy made me comfortable to say, this is a right fit because I see them working to do the things that the business needs to grow. Working with Strategy Leaders definitely enabled us to grow the business from where we were to where we are by teaching us how to work on the business and not in the business. I have to say the staff at Strategy Leaders is wonderful. Not only in your in-session meetings, obviously when they're completely focused on you helping, but Andy has been a fantastic sounding board, for me personally, through the transition, into the partnership with Craig and Brian. Our new building is 19,000 square feet. It houses our office in the front where we do our pre-press, sales, project management, and then in the back side of the building is where all our manufacturing is done.
We wanted to practice what we preach. So part of the reason for this move, we needed more people, we needed more machinery, we needed more of everything.
Strategy Leaders helped us consider or even consider a move by helping us understand our finances and letting us know and feel comfortable that it's time and you can do it. What I really like about Strategy Leaders is the accountability aspect of it. It's very easy to come up with ideas and very difficult to execute. And the team at Strategy Leaders makes you accountable. They make you, whatever you say you're going to do, you do it. And it might not happen immediately, it might take some time, but ultimately you get where you need to go.
So welcome everyone to our webinar. And I hope you enjoyed that video. If you caught some or all of it.
The name of our company is 71.
Hold on. There we go. So we love sharing stories about our clients and talking about what they've been doing and planting seeds with other people as to things that we can do to help them. as we go through today's webinar, we will have an opportunity here to engage with us. We are going to take questions at the end of the webinar. There's a chat window and a Q&A box that you can use if you want to ask questions or you want to send a comment. If you'd like us to get in touch with you, please make sure to let us know that through the Q&A or the chat. And one of the things I do want to do is I want all of us to get to know each other. So I'm going to do some introductions on us as strategy leaders. But before we do that, Dahlia is going to launch a poll question here so that you can tell us where you're coming from. So Dahlia, if you want to bring up that first poll question, and if you can just tell us where you're coming from. Are you a business owner? Do you work for a privately held business? Or maybe you're an advisor to privately held business or something else, or for some reason it just doesn't apply. Pick the box that is right for you. And as you work on that poll question, I am going to go and do a little bit of an introduction on us. So what we bring to the table at Strategy Leaders, here you can see on the left a picture of our executive team. What we bring to the table, this business was founded based on research that was done at Columbia University on how to build a successful 21st century US-centric economy using the backbone that we have of 6 million privately held owner-operated businesses here in the United States. We as a company have been in business for 25 years. We bring to the table a very skilled team of specialists at working on the growth and development of businesses by working with the owners of those privately held businesses. We do help owners transition their companies from the entrepreneurial stage, which is where we all start, to business builder, which is where the business is still privately held and owner operated, but now deliberately run for growth, profit, stability, predictability, and then consequently for the owner peace of mind. We operate in a broad set of industries. We operate nationally, and we have a broad set of services that we bring to the table as well. And we'll tell you about that a little bit more a little bit later. So to get going with today's webinar, here are some of the ways that we do help our clients. We teach entrepreneurs to be business builders. We actually go through a teaching process. We help companies create business plans that are going to yield them the growth, profit, and stability that they specifically want. We do coaching for business owners and executives. We help to build management teams. We do a lot of work with family-owned businesses, whether that's generational transfer, intergenerational work, cooperation, collaboration, family members understanding the game plan. We work on valuing businesses, whether that's to exit or to acquire. We do give business owners advice on how to sell their businesses when they're ready, or to how to buy a business if they're looking to expand and grow. We work on transition planning and implementation of transitions. And then what we're going to talk about today, which is we're very strong at dashboards, working on KPIs, key performance indicators, and what if modeling. And I would point out here that we would love to have you call us or let us know that you'd like to have a conversation. It's free. And we'd love to explore the possibilities of where business owners are going to build their businesses. So in terms of today's webinar, we're going to start with KPIs, key performance indicators, what they are, what are the barriers and opportunities in terms of using them, the benefits, how to use them, and then some examples of reporting on them. And then we're going to switch over to dashboards, and we're going to look at how you use or what you use dashboards for. We have a live example for you as well as a mobile example. We're going to talk about how you might want to get started with a dashboard and what your options are. And then finally, we're going to wrap up by talking about how to improve performance with KPIs and dashboards, and then take your questions. So let's get started here. What are key performance indicators? KPIs is an acronym for key performance indicators. It is any item that someone in the company agrees or decides to report on. It most often is expressed as a number, but not always. It can be in any area of the business. It can be a micro or a macro number. And it starts with a statement of what's to be measured, which is the definition of the KPI. Often it does start, but not always, with a goal or what I'm trying to accomplish. People tend to avoid KPIs. They think that it's going to be dry, hard to do, too much information. Our recommendation there is start simple. We find a lot of times owners and managers are not clear about what to look at, or how to, pick something out to look at. And our recommendation there is just get started. Practice will improve your ability to spot critical information and hone in on what you should be tracking. We do find that business owners in general tend to rely on their gut decision making, and oftentimes, if they've been successful, their gut is pretty good. But as the business grows, the decisions become more complex, and there is more error potential, either in interpretation or in actually understanding the underlying data and how it links together. And that's something you want to avoid, is that error potential. Finally, it's worth noting that in our general population, about 65% of us are visual learners. And that means that we remember what we see. And so you want to use KPIs and dashboards to make things more visible, to translate it from just a number to something that I can engage with more. And then finally, the world is moving to analytics and to improve decision making. And my recommendation to business owners is jump on that train and make the most out of it. In terms of barriers, there is also, from business owners, very often the fear of sharing critical information. Owners worry that employees could disagree, or that they could actually see what the company is making and then start to demand more. I will point out that what we find in actual fact is that employees do engage more and get on board more when they have information to work with. And in terms of demanding more, you don't necessarily have to tell everybody how much money you made. You can work on data elements within the company that would lead to employees having a better picture of their particular area of the business. One of the things that does happen as you shift from top down to bottom up decision making, business owners worry that there's going to be a loss of control. In fact, exactly the opposite happens. As you increase participation and bring the bottom up into the decision making process, or at least the information contribution process, you start tapping into specialized knowledge. And I will point out that anybody in the organization can use KPIs, or key performance indicators, if those are geared correctly. So then it comes down to picking the right things to look at and helping people to stay on top of that. So just to wrap up here a little bit, in terms of the benefits of using KPIs, it's fact-based way to evaluate performance. You can use it to identify areas of excellence, develop best practices. It creates a foundation for deep dive analysis by pointing out where you need to go and look and what you don't need to look at because it's working. You can use KPIs to then lead to better decisions and better informed decisions, to plan and measure resource allocation, as well as to facilitate debate on how to use or how to achieve your goals. So what do you want to do in terms of using KPIs or getting started with KPIs? Often we recommend set a goal. So in any area of the business, pick something that you want to have a goal, and so that if you understood where you are relative to that goal, you'd at least know what you need to be working on. That helps you to get everyone in the room agreed on a common focus. We're going to focus on this particular item. You look at the facts of what's going on with that, whether you're at goal or not in the beginning isn't really as relevant as just where are we exactly. If you get a couple of numbers that relate to each other, you can then start building ratios, which is another form of KPI tracking. And you use this data to identify what is working and show everybody this number is working and it's exactly where we want to be. and what's not working. So our goal here is very different from where we exactly are. So we now need to start digging in and thinking about what we need to change. And then as you facilitate discussion about what's working and what's not working, you incorporate what you're learning into the planning and development process of the business. In terms of actually reporting on KPIs, you want the KPIs to show up on the desk or the desktop regularly. So it's there and I'm looking at it. You want to think about KPIs. I usually advise, think about it like it's a lab report that you would get for doing a physical. So if you think about a lab report, you get a whole bunch of items measured. Maybe your cholesterol just went off the charts and it's out of line. And so that shows up either in a bright color or in a different column. It draws your attention to it. Everything else is in line, and you just don't have to pay attention to the stuff that's in line. You pay attention to your cholesterol level. That's the same sort of thing here, although I would tell you in most cases it gets to be easier than working on lowering your cholesterol. It's often displayed, KPIs are often displayed in a daily, weekly, or monthly report. Again, I'm going to give you an example in a minute, and it gives you an opportunity then to jump on anything that's out of norm. And once you understand the norming things, the ones that are in line, then you can also start using those highly stable KPIs in your planning process. So
Andy,
I'm
would
getting
you like to share the first poll results?
Oh, gosh, I am so sorry.
It's okay.
Dahlia, thank you for interrupting me. So let's look at the first poll results. We actually have a huge chunk of our audience is business owners. That's great. And then the next huge chunk, so the majority of you folks are people who work for privately held businesses. So the majority of you either are business owners or people who work in privately held businesses. That's great because you are the ones that are going to make our 21st century economy work. So I'm so glad you're here and interested in the topic we're talking about. We do have some advisors, happy to share information with you as well. And if you have any questions, please reach out and let us know. Okay, thanks, Dahlia. Please interrupt me when I skip something. So here's some examples of KPIs that you might use in sales. These aren't the only ones, these are just some ideas. If I'm managing sales or trying to figure out what's going on in sales, I might want to look at the new outreach. So the number of calls we're making per day, the number of emails or the number of queries that we're getting on a daily basis. I might want to look at leads in the pipeline. That would probably be either a daily, weekly, or monthly number. The number of proposals outstanding, again, could be daily, weekly, monthly. The number of new contracts that I've signed, probably more likely weekly or monthly, depending on the velocity of the business. And then my average value of my contracts, that would be a good number to look at. I probably would look at that on a little bit broader horizon, like monthly or quarterly. In terms of putting that data into a report, think of this report as a report that I would get weekly. Here's a report, daily. Here's a report that I would get weekly. And then here's a report that I'd want to have monthly. So we talked about new outreach. Here's an example. Let's say that we wanted 300 new outreaches per day. And on this particular day, the outreach was actually only 200. And it then shows up flagged in red or pink to draw my attention to it. At the same time, we've agreed we're going to look at leads in the pipeline. We've set a goal for 200. And on this week, we actually had 220. So it's flagged in green, which means it's okay. I don't need to look at it as a number. Proposals outstanding, we've said we want to do 15 a month. We're at 25 for the month, so that's flagged green. New contracts, we want to do 5 a month. We actually only did 3, so that's highlighted in pink. I need to go and pay attention to that. So it's helping to simplify where to pay attention and where to just keep putting my foot down on the gas pedal. And then finally, my average contract value is 100,000 and I've got 110,000. So that's in green. And then as I develop my KPIs, I might actually do one more So I would compare my goal for new contracts and average contract value. I'd multiply these two together. So I'd want to be doing 500,000 a month. And then I would look at what the real data is getting me. In this case, 3 times 110 would be 330,000. So if that came in as another line, this is an expression of a comparative value, then that would be flagged in pink because it's under my goal for 100,000 or for 500,000. I'm coming in at 330. So as an example, there's a lot of things that you can do with sales. Let's go look at some examples for finance and operations. Under finance, you might want to look at the total revenue that's invoiced, your deposit amount. You might want to look at cash flow that's outgoing, or whether you're positive or negative in terms of cash flow. Gross profit margin, net profit margin are things that we very often look at. And in either of those cases, that probably would be on a longer time frame. So on a monthly basis and a quarterly basis, monitoring how the margin is changing. In terms of operations, I might want to look at units produced or an error rate. Those might be daily basis, or they might be, the error rate might be over a longer period of time. The waste rate would be an example if you're concerned about what's happening with inventory or with lost hours. And then my cost of goods sold percentage, which would be the complement to my gross profit margin. When it comes to marketing, there's a million things that you can track in marketing. If you have worked with a marketing company, my hope is that they have provided you with a dashboard that you can look at, and I hope it was usable. Sometimes we find it's great, sometimes not. Here are some things that you can do internally. So you might want to look at how much you're spending on advertisements, or what kind of website traffic you have, how many emails you have outgoing, what's the open rate, either on emails going out or on people who arrive at the website on a particular landing page, how many leads you're generating, what's your return on investment for a particular spend that you're spending in marketing. And obviously, customer acquisition cost is a great one to look at. In human resources, you might want to look at the number of employees or the number of full-time equivalents. So that's full-time employees plus all of your part-time hours. And if you get the number of full-time equivalents and you go back to your finance page where you're looking at the amount of revenue per month, then you can compare revenue per FTE and begin to get an understanding of how productive you are being with all of your employees. You might want to look at employee satisfaction or the number of positions without backup. I was actually just talking about that with a client this morning, and this is a key performance indicator for them in several areas of the business as they're working on making sure that every position in the company has at least one backup. You might want to look at the number of open jobs you have or the depth of your recruiting bank. And then something that I think a lot of us are paying attention to right now is the employee turnover rate. So given those examples, then we might want to jump over to the balance sheet and look at things like accounts receivable or accounts receivable over 60 days, accounts payable, your loan balance. And so just think, as a business owner, wouldn't it be great if somebody was putting onto your desk on a daily basis where you stand in terms of accounts receivable and the amount of revenue that you invoiced and the number of leads that are coming in? It was there every day, and you could look at it and have an understanding of the pulse of the business. That's what you want to be thinking about here. Some other things in the balance sheet that you probably want to look at: current assets to current liabilities and debt to equity ratio. These are banking ratios, and your banker cares a lot about how you're doing with these. So you probably want to track them and get used to looking at them and talking about them. And finally, shareholder equity. This is one that we see very few business owners looking at, but this is the ultimate measure of how you're doing at growing the value of the business. And think about shareholder equity as the equivalent of, if you were thinking about your house, how much is your house worth? All right. Now we're going to flip over and we're going to talk about dashboards. So dashboards are used to track and analyze results over time. So we're going to take that KPI information and we're now going to start tracking it over time and analyzing how it's working over time. And it also is a way that you can convert results over time into charts and graphs. We're going to show you what that looks like. You can use it to identify problems, gaps, as well as opportunities. So here's something that's working really well. Let's do more of that. You use what you're learning through the dashboard to then go back and adjust your KPIs or your goals. So are we identifying the right KPI to track? How are we doing against our goal? And do we need to have something in addition that maybe we need to look at? Once you get really good at the KPIs, the goals, and tracking data on the dashboard, and you're really comfortable and confident, and it takes you a while. Usually we find with our clients when we're getting this set up, about 90 days in, we're ready to shift from this is what happened to you to projecting future results and what if modeling. So now we're comparing where we were to where we want to go, and looking for insights about how best to get there. And when you make that shift from looking at what happened in the past to what's going to happen in the future and start working on what's going to work in the future and how we're going to attack that, that's where, as a business owner, as an executive team, as employees, we start to gain control and we start to build confidence. We actually can make this happen. And that's what you ultimately want as a business owner, is a comfortable and confident team. So now we're going to go and look at an example of a dashboard. I have one up here, and give me 1 second here. Hold on. And I'm going to flip over now to Christina and let Christina talk you through this dashboard. This is actually an example of a dashboard that we run for our clients. So Christina, take it away.
Thank you so much, Andy. So like Andy said, today we're presenting you a quick snapshot of our financial dashboard that is offered both as a desktop version, and we also have an app for quick access on the go. We find that very usable if someone needs to go to the bank and pull up a dashboard, it's right there. So our first graph shows cumulative 2022 actual data versus 21 and 20. Here we're tracking the primary drivers of the P&L. We're looking at the revenue, that's the green line, gross profit, blue line, overhead, red line, and the net income, the yellow line. We're comparing how the client is doing this year versus the last 2 years, like I mentioned. The importance of that is the visualization that Andy spoke about, and being able to quickly spot what is up and what is down, whether there are any problems or trends to watch out for on a monthly basis. And here you can see that the revenue and net income for the first quarter is significantly up versus 2021. This client is doing very well. So once you have this data, Andy, if you scroll down to the next graph, once you have this data and you can master it and understand it, what's happening historically, you want to start using that data to forecast. And on this graph, the dotted lines are what we're forecasting for 2022. The plan is to continue to press hard based on the forecast for this company. We expect revenue to gradually grow throughout the year. Gross profit should see a nice increase as well. Well, we're actually planning to hold overhead somewhat constant. They have a good history of that. And you can see we're ahead of the forecast for Q1 revenue. The owner and management team can use that as a visual perspective for discussion, and like, how are they doing? What needs to be done? Maybe they need to adjust the forecast because they clearly have come out better in the first quarter than they had even hoped for. So moving to the next slide, if you move down a little bit, Andy, once you have this forecast established, you can put the forecast into the slides, and you can see here on the year-over-year revenue dollars, if you focus on the red line, that is the goal line that we want to pay attention to. Those are the goals for the year. The other horizontal lines are averages comparing the same period for year to year. So we're comparing the same period for each year. So historically, this client tends to start out the year slow. They build up over the summer, and they really hit a good stride at the end of the year. So part of what we want to work with this client on is teaching them and working on, is there a way to go faster early in the year so don't have to push so hard in the fourth quarter. It leaves a lot of stress in the end of the year. As you can see here on the gray horizontal line, that is the 2022 data. They have actually started off the first quarter of 2022 very strong. They may not have hit the average goal line yet, but since we know and we concluded that they typically usually start out slow in the year, this is a good sign. They probably will pull ahead. And we can use this data to make monthly adjustments, and we constantly will know what's going on. We don't have to wait until, on a quarterly basis or annual basis. We constantly know what's going on. We can make decisions based on that. If you scroll over to cost of goods sold, I would like to pay attention to that a little bit. Most companies do not have a good handle on the cost of goods sold. Something that we do with our client is we help them really understand what belongs in cost of goods sold and what doesn't. So from a business perspective, from business analysis perspective, it's very different from what goes into cost of goods sold from a tax return purpose. If you look at this slide and focus on the orange line that goes across the page, this is the client's cost of goods sold percentage. It's still bouncing around a lot and not following revenue like we would like it to. Revenue is the green line. That means that either we have cost that doesn't belong here, or we're dealing with a huge variability in revenue that then is not varying cost of goods sold. So as things ramp up or ramp down, they may not be adjusting what they are spending on cost of goods sold to things in line, which could in turn into a profitability issue. So something you want to pay attention to. You can't obviously make money at a too high level of cost of goods sold. And when you see spikes like we do in December 21, if you want to point that out, Andy, the management team needs to react to that when they see a spike like that. We actually do know what happened here. What happened here for this client was Omicron, so revenue dropped, and it's December. We're paying our bonuses, and they had decided to make prepay some expenses for 2022. So we know what's going on, but it may not always be that clear, and you may have to do some digging. So if we move on to the next slide, year-over-year gross profit dollars. So the complement to cost of goods sold is the other part of the equation, namely gross profit, which is what you have left over to run the business, put money in the bank, or put money in the shareholders' pockets and pay off debt. So this is really important. The first quarter profit performance have started off the year great and exceeding the forecast, but we must also note that it's skewed because we did, as we looked at before, we prepaid some expenses for Q1. So we expect this performance to drop closer to the goal line as the year progresses. We can see right now the gray line is above the red. We actually expect it to drop down a little bit. Looking at the 2021 results, the bar goes up and down, and it seems that it was a slow start to 21. Well, we were still coming out of COVID, so that's really the reason behind that. But once we hit May, they're basically beating the average of 2019, except from July and December, and this upward trend is continuing Q1 of 2022. If you scroll down to the year-over-year overhead dollars, in this graph, we pay attention obviously to the overhead. What does overhead measure? It measures what it costs to turn on the lights, pay the rent, fixed expenses, whatever it is that you have to cover here. Here you're looking obviously for a lower average. As you can see, the company has done a really good job at keeping the overhead fairly stable through 2021, and they're continuing to do so through 2022, despite actually increasing the revenue quite significantly. So this is really good and what we want to see. We do, however, expect that the average will slightly rise because they have to hire in order to keep up this revenue growth. So yes, and if you go over to year-over-year overhead over revenue percent, here we're evaluating how the company is doing in terms of productivity. Is the overhead getting them more revenue? If that's the case, remember again, revenue is a divisor, so we want to see a ratio that's dropping. If we look at the dark blue bars from July through November of 21, you can actually see they were getting a strong payoff compared to the previous year of 2020. So this payoff is continuing in 2022, doing well. They're doing a good job of reducing this ratio. If you look in December, again, I just want to explain this high peak. It was the conscious decision made by the owner to pay out bonuses and some year-end spending. But right now the company is right on target of the red goal line, as you can see, for hitting this ratio. So doing a great job here. So now we want to kind of pull all that together in one slide, digging deeper here into the analysis of the P&L. And we start looking at monthly and yearly trends. So you can compare to break even. That's the orange, the thicker orange line going across the page, So every time revenue, which is the green line, is above the orange line, the net income is going to be positive. That's an important line to pay attention to. So you can see how they're doing well, moving the needle with producing revenue, again, green, gross profit, that's the blue line, managing the overhead, that's the red line, and producing net income, that's the yellow line. We use this graph to figure out what are they doing right. And revenue is back as we can see it. It's the average is growing gradually. That's what we confirmed on the individual slides that we saw before. And now you can see how the gap is widening between the horizontal lines because we actually were able to keep overhead constant in 2020. The yellow line going across the page, that's the net income, has jumped from a negative in 2020 to a significant contribution in 21 and 22. So other things also to pay attention to is that you have the yellow bars going into negative. So those months, the owner actually has to pull money out of their pocket and put it back into the business. In 2020, this owner had to put money back into the business 6 times. Obviously, it's COVID. It was a tough year for most people. But in 2021, they only had to do it once. And then in December, that was the conscious spending decision. So they really recovered well. If we go down to the next slide, we are looking at revenue by quarter. Here we're analyzing the quarters, which we really recommend for our clients. We're looking at how revenue is trending over on a quarterly basis in the same year. And we're also trending comparing to quarters in the past. If it's down, where did it drop? So you can see here, there's a pattern emerging. It dropped for this client first quarter of 2020. Clearly, we're going into COVID. But you can see how well they've actually come out of COVID. They're slowly having this upward gradual trend moving up. And actually the 2 last quarters, they have ended with the highest average we have seen in their data so far. So very impressive. So the average is this a line that's going across those spikes going up and down. That's the average for that quarter. Another way to look at revenue, it's more or less the same picture, but some clients like to see it another way. This graph looks at comparative performance as well. And we're looking at which quarters are below, which are on average, just another way to look at it and get a quick feel and start talking with management and how they're doing. What do we need to do? Do we need to put the foot down on the gas pedal and exactly which month, where do we need to push harder, or where we're doing great? So I don't want to take up too much of your time, but I would like to mention we have about 40 graphs in total. I would also like to mention that we dig greatly into the balance sheet, the same way we do the P&L in terms of analysis. We're looking at, how are we doing for assets? How do you manage your liabilities? How do you manage your cash? How long can your cash last if we hit, let's say, another pandemic? Historically, we have these black swans coming every so many years. What are you doing in terms of building your equity? Which is the ultimate success driver for the company? These are the kind of things that if you can graph it out, it just makes more sense to do it because the majority of us are visual human beings, just like Andy said. With that, I would like to turn it back to Andy.
Thank you, Christina. So I'm going to flip back over here, and next slide is, so here's a visualization of what it might look like on your cell phone. So we get owners of privately held businesses. They're busy. They're out in the field. They're running around. They're making things happen. And getting back to the office late at night or trying to get into the office early in the morning may not give them enough time to stay on top of the things they want to stay on top of. And because of that, we've worked very hard at building a dashboard that will actually translate to a mobile environment. So you're getting data feeds, again, depending on how your data is set up and what kind of a platform you're on, you may be able to get data feeds very, very quickly, but you can certainly see what's happening on a regular basis with all of your key performance indicators graphed out into a dashboard. Now, in terms of looking at the return on investment on dashboards, so again, we want you doing dashboards. Why? Because it will help you improve your decision making. It'll help you achieve greater transparency. It's a great tool for enhancing communication and teamwork. So as people are looking at how the data is shifting over time, people start putting their fingers on the page and going, look at this, look where this bar is up or where this bar is down. Let's talk about why that's happening. So it becomes a tool to engage people and to increase people's awareness as to what's happening. As we said before, it also is a way to make numbers and concepts easier to grasp because it makes it more visual. It will help you gain key insights into the business performance, both historically and then against what you want to do in the future, which then really helps you move everyone's eye to focusing on the future. Where are we trying to go? What do we want to accomplish? And how close are we to achieving that? So in terms of options to get started, you have a lot of options. Our recommendation would be to start with KPIs, pick several items to track as KPIs, and publish those results regularly. So report on people's desktops on a daily basis, weekly basis, quarterly basis. Just pick a few items to track and practice putting the reports on people's desks or desktops. As you work on that over time, then decide what to compare and start developing ratios. And shift, then as you get good at understanding those KPIs, shift to more of a forward look by setting goals if you didn't have those already, and comparing what you are accomplishing to your goals. Ask people to get together in groups to review reports and talk about what they're learning and what else is needed. Then make the shift into a spreadsheet and into graphs. That's the transition into building a dashboard for your company. You can certainly build it yourself. In Excel is a great tool for both spreadsheets and graphing. If you've got someone in the company who's good at that and has the time to record data there. We also would recommend that you take a look at ready-made dashboard solutions. There's solutions out there in the marketplace that you can acquire that will save you time and energy, and some of the learning curve will get speeded up. You want to, as you work on a dashboard solution, then you also want to be able to move from standard metrics to performance drivers for your company. So you want to have the flexibility to be able to customize the data that you're looking at, that it helps your team hone in on what they need to know. We would suggest that you hire advisors to guide the selection of what to track and how to track it. And over time, you want to expand to track all of the KPIs to the business. So when you think about how to improve performance by using KPIs and dashboards, decide what you want to explore and improve. Start simple. Look at anything that you've selected on a regular basis, whether it's in a KPI or in a dashboard. Compare different metrics, develop ratios, use what you've learned to set goals and measure progress, evaluate the revenue, the expenses, the profit trends. Dig into customer quality and asset utilization. This will help you perfect the kinds of customers that you have and perfect how you're spending your money and what you're getting for it. You learn how to manage cash flow, make a plan to reduce debt levels, and then track how you're doing with that. Evaluate returns on various investments, your ROI, and then learn how to build shareholder equity and exit value and track how you're doing with that as a metric. And I would like you to just be very, very cognizant that by tracking the proper KPIs and using a financial dashboard, your business can gain critical insights into overall performance, as well as identify areas where you need to make improvements. So think about getting control by shifting from historical reporting to setting and achieving long-term goals. So my challenge to you is, what are you doing in order to secure the future for your business and make sure that your business is doing everything that it can to thrive? If you're ready to get started with a financial dashboard and you've still got questions, I'd encourage you reach out to us today. We can make it easy to get set up. We can help you translate your specific needs and goals into metrics, teach you and your team how to make a dashboard work, drill down into your unique requirements, make the KPIs and dashboard tracking relevant and useful in your specific environment, something we're really good at. And at Strategy Leaders, we do specialize in helping business owners succeed. So use the tools that are available to you. And if you want to learn more about our services or get started on your financial dashboard today, please contact us. Let us know you'd like to talk. And with that, we are going to ask for a little bit of information from you as a thank you to us for putting this webinar on. Dahlia is going to put up another poll question. We'd like to know what presentations you'd like to see from us in the future. Check off any of these categories that apply. And then as you're working on that, we're actually going to shift over and we are going to then start taking your questions. And Dahlia, do you have some questions for us, or Caroline?
Yes, I do.
Okay.
So this one is from Floor. She says the dashboards look fantastic first. And her question is, I'm assuming there is a setup fee to create the dashboard. Can you talk about cost?
That's a really good question. So if you're going to build it yourself, your cost is going to be labor. Having someone in the company who is working on that setup versus anyone else that you're going to hire from the outside. And and then the cost of software to get started. If you are talking about building a dashboard using a product in the marketplace, ours or anyone else's, you're going to probably have a couple different categories of cost. One is just acquiring the software. Is it app-based? Is it desktop software? So there'll be a software cost that you'll have to start with, and that probably will be either a monthly or an annual fee, depending on who the vendor is. And then the second will be the support that you may want to customize and hone in on helping you get started in your company. That will be a variable cost, and it will depend on how much help you want, how much training you want to do with your employees, and what kinds of assistance you need trying to figure out what it is that you should track. I'm don't mean to dodge your question, but I will tell you that the costs on software and the costs on support can vary greatly. And it really is going to depend on an individual situation. We'd be happy to talk with you about your specific situation and then give you a quote for what it would cost and be very specific. That's something we pride ourselves on, that we are very specific with anyone that's making an inquiry at Strategy Leaders. Here's what you would be looking at. But we probably would want to quote specifically based on knowing where you are. So do you need to organize your chart of accounts? And that's going to be work before we can even get to the data. And how good is the database that you're working with now? All of that comes into play.
If I can step in 1 second, because I do think that she's asking specifically about our dashboard, and I might be wrong. I'm happy to reach out to you to talk to you afterwards, but we do have a set fee for our dashboard, $5.99 a month. I would say with that comes a consulting session. We'll go over the numbers with you. We'll be very specific on what we are seeing. We're very good at picking up these trends because it is showing up in these graphs. So I'm happy to reach out to you after this webinar and just set up a time to just chat about what your needs are. Hopefully that answers the question.
Floor says, thank you. It did.
Great.
Great. So we do have another question. Let me just pull it up here. In your opinion, how much more success have your clients achieved when they use your dashboard versus just winging it and tracking these things on their own?
Oh, I feel like that's a setup question. Thank you. It's what you will find is that the difference between being at the mercy of where you ended up versus taking control and saying, we're going to go here and we're going to learn how to go here, is the difference between getting whatever you got, whether you wanted it or not, and getting what you want. And I would tell you that when we work with our clients, we are typically working on a model of double revenue and triple profit in repetitive cycles. So learning how to grow revenue, learning how to control costs, learning how to manage your cost of goods sold and gross profit, and then turning that into outcomes on the balance sheet. So we also work with our clients on building up reserves so that companies can survive this ever faster set of black swans that's coming at us, as well as to keep the company having funds available so the company doesn't have to rely on the bank for funding in order to invest in growth and development. So I would tell you it's huge. When we start with our clients, we find most clients have a limited amount of money in the bank. They don't have a good understanding of how much that costs them to run the business. And within a year, we usually are well on our way to getting a year's worth of savings in the bank, as well as to controlling and reducing some of the operating costs and getting the revenue on track where it is on track to double and you're pulling gross profit up right with it.
Great, thank you for that answer. Our next question is about a marketing dashboard. They said, my marketing is all over the place, so I think I would be interested in a marketing dashboard. Would I be able to customize it to what I want to track for my business? And would your team be able to help me figure out the most important things to track?
Robin, are you there? This is really one that would fall in your wheelhouse if you're there. I know Robin's
I'm
playing
here.
double duty today, babysitting her son. Go ahead.
I'm here. Yes. So we do have a marketing dashboard. It's set up very similarly to the dashboard that Christina walked you through. But it tracks things like all the different traffic metrics, organic versus paid, top pages, bounce rate. We can connect all your social media analytics. We can connect sales data. So if you use something like a HubSpot or a Salesforce, we can connect that in. So we can really try to nail down to cost of customer acquisition or and things like that. A bunch of the KPIs that Andy listed before.
Great, thanks. That was a great answer. And I think that about does it for our questions today.
Okay, well, we're coming in on our 2-hour mark. So I want to thank all of you for your time today and for your interest. I appreciate you being here. Please let us know if we can help you in any way. We are passionate about helping business owners to succeed, to thrive, to grow their companies in a way that will support the health of the U.S. economy. We like to say that our mission is to support the health of the U.S. economy one small business at a time. It's very individualized. We want to help your company and then help you learn what we've learned from everybody else that we've worked with. So thank you very much for coming today. I appreciate you being here, and we'll look forward to talking with all of you. And thank you all for your comments, for your kind comments. I really appreciate that.